You have to understand the implications of this sideways consolidation. So as long as we continue to hold this lower band right here, all right, now I still remember a week ago we popped above it and we closed above it, and everyone was like, oh, here we go. Gareth was wrong. It's going to break out, blah, 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 blah. And then what happens? They get the good old-fashioned rug pull, right? So that's what happens. That's the inevitability. Is you have to understand the confirmation signal about how key it is. You must confirm a breakout to be a breakout, just like you must confirm a breakdown to be a real breakdown. I can't tell you how many institutions sit there waiting for you to jump the gun and go long thinking something's a breakout, only to pull the rug out from under you.
Bitcoin has remained trapped in a tight trading range since June, showing limited response to recent positive news. For example, following the conclusion of the Ripple versus SEC case in the US, where the judge ruled that Ripple Labs violated American laws but XRP was not a financial security, Bitcoin initially jumped to $31,842 but failed to sustain the momentum. Despite supportive factors like weak US economic data, including lower than expected job creation, inflation rates, and declining retail sales and housing sector, Bitcoin's reaction has been subdued. Market analysts predict that the Federal Reserve may raise interest rates by 0.25% in the upcoming week but are likely to pause thereafter. Gareth Soloway highlights that Bitcoin's consolidation has taken longer than anticipated, and it now faces two potential paths: an upward breakout or a downward move. As the cryptocurrency market continues to navigate these conditions, investors and traders are closely monitoring Bitcoin's price action for further clues and signals. In conclusion, the current market situation suggests that Bitcoin is consolidating within a narrow range, and its response to recent news and economic data has been muted. The impending decision by the Federal Reserve on interest rates could potentially influence Bitcoin's future trajectory. As uncertainty prevails, market participants await further developments to gain clarity on the cryptocurrency's next significant move.
What did we see? We saw Bitcoin reversing here, and we have now retested this low. Now, the impressive, there's positives and negatives here on the chart. The positive is we're still inside of this band, right? We're still inside of this realm. The positive is also the last 2 days we've been piercing this lower band of 30,000, and they've rescued the market. They've rescued. You've had buyers come in and keep price right around that 30,000 daily close, give or take by a little bit. Today, we're up just fractionally on the Bitcoin price. All right. So again, those are some positives. The negatives are this. Look at how long we've been going sideways. Yes, this is known in technical analysis as bullish consolidation, but really bullish consolidation should break out by now. All right, you should have had a breakout. Doesn't mean it can't, but probabilities begin to shift, right? We start to say, okay, it hasn't been able to. Think about this. There's the old analogy, and I love this analogy. This is an analogy I use about resistance or support. Think about yourself. You're outside of your house. There's a fire in your house. You have your cat or your dog in there. You need to break it down, right? So you ram against that level. That's resistance. You're ramming your shoulder into it. You hit it once, it probably doesn't break down. You hit it twice, it maybe doesn't break down. By the third or the fourth point, the door gives way. Okay, that's the thought process. So if we look at Bitcoin, you hit it here, you hit it here. You even kind of got halfway in and it still didn't give way. And so what happens is, let's say there's that fire and there's that cat or that dog inside that you want to save, and you get to a point where you ram the door 50 times and it still doesn't break. What are you going to do? Well, you're going to figure out another way. You're going to maybe go around to a window. You're going to go around to the back door. You're going to leave this area and move away. And that's the thought process where if you can't break out after a certain amount of time, the path of least resistance is to, in this case, the downside. All right. So again, to summarize, Bitcoin's still within this range. But again, if we confirm below this level, you're now headed to 28,500 or so, this pivot. And if you break through that, let's talk about where we're headed. This is my target. Okay, target is 26,900, basically around 27,000. Amazing trend line. Now, I want to be clear on this. As long as this trend line holds, this one here, this white one, then Bitcoin can be bought on pullbacks. Okay, why? Well, very simply, this is an upsloping trend line connecting all the pivot lows together. That means it is an uptrend. The trend is still up. If you break this line and you start trading down in this range, the trend is not up anymore. It has failed. And now you have to think you're probably headed back. First support would be 25,000, then potentially 20,000. And eventually, if you keep breaking these pivot lows, you're going back to that 15,700 level. All right. So again, that's your summary. Now on the upside, let's just say Bitcoin eventually breaks out, which again, I'm a long-term bull. So eventually I do think Bitcoin breaks out. My upside is very simple to calculate here. You take this pivot from 2019, you stretch it right through here. This is my ultimate kind of, 6 to 12 month upside target. You could see that's a beautiful trend line through these lows right through here. And that's around 45,000. So again, if you're able to break above this level, this 31,000 and confirm, then you're headed to about 45,000. There is resistance around 35 that you'll have to monitor, but I still think, again, the momentum probably carries us up to about 45,000.
The Nasdaq has experienced an impressive surge of 34.4% this year, reaching levels not seen since early April 2022. This remarkable growth has been supported by a relentless rally in mega-cap growth stocks like Nvidia and Meta, fueled by optimism surrounding the potential of artificial intelligence. Furthermore, the U.S. economy has demonstrated remarkable resilience, surpassing many expectations, and there is anticipation that the Federal Reserve's aggressive rate hike cycle may soon come to an end. Gareth also discusses the second cryptocurrency, Ethereum, along with the S&P 500 and the Federal Reserve's tax revenue, pointing out that their current patterns resemble those often observed before an incoming recession. With these insights in mind, let's return to the video to explore the topic further.
Ethereum, again, this is the beauty of it. Look at this little channel right in here. If this breaks, we head down to this level around $1,730, $1,740. If this area breaks, we're probably headed to this pivot high right up here at around 2,130. Now, one thing I want to say is, this is the beauty of it, guys. Everyone, when I go on interviews, they always ask me, well, what's your big play here? What's your thought process? What's your max downside? And my max downside still is 12,000 on Bitcoin with worst case scenario of 9,000. Now, 9,000 would be achieved only if you see a stock market collapse, because it would be a liquidity draining panic scenario, right? So people would run away from risk assets and Bitcoin would have probably a downside move sub 10,000. All right. But the bottom line again is that when you're looking at these charts, I'm in here trading long and short multiple times. Like we were short Ethereum already and we banked, and Ethereum went back up and we went short right here again, and now we're in the money. The S&P goes to the all-time highs. It's possible. I'm still a skeptic until it happens. I'm a technician. So just by default, I look at all the resistance levels that it has to get through first to get there. I look at the RSIs. I look at how extended things are. But again, the way this market has been advancing since this low in March. Now, by the way, what happened in March that kind of shifted things? I'm going to tell you. The banking crisis. We saw Silicon Valley Bank fail. We saw a bunch of these other banks panic. And what's fascinating about this is that basically the Federal Reserve and the government guaranteed deposits. That was the kicker here. So now all of a sudden, even though all of these banks are holding all this dead weight paper, they're underwater hundreds of billions of dollars, there's no risk to the consumer. The consumer can have as much money as they want at a bank, and virtually there's no risk of them losing their deposits. And that marked the change in character. If you look at where this market began this big uptrend, now you had uptrends prior, but they had big pullbacks, right? This is the uptrend here that hasn't had a big pullback, and it coexists with the Federal Reserve getting involved, basically giving the banks lots of potential liquidity so that they are made full, and there we have it. All right, so again, very interesting to see that. Now, if we go to the QQQ, fascinating chart here. We are right at the upper end. Declining government tax revenue is important, is because we're not in periods like we were in 2010 or 1980 or 2000 when we had scenarios where the government didn't have as much debt, right? Right now, we are at $32 trillion in debt for this country, and interest rates have just gone up exponentially from basically 0 to 5.25%. And so now you have $800 billion a year right now, and that's going to go up every single year, at least right now, $800 billion that are going to be influencing how much money we're paying in interest. $800 billion in interest alone. Yet we see government tax revenue falling off a cliff, okay?
On July 19th, the Central Markets Authority of Kuwait, the country's financial regulator, issued a circular announcing the prohibition of cryptocurrency as a form of payment in the Middle Eastern nation. The circular also forbids crypto investments and mining activities in Kuwait. Additionally, local regulators are not allowed to issue licenses to any individual or entity intending to provide cryptocurrency services as a commercial business. The circular follows the recommendations of the Financial Action Task Force to combat money laundering and terrorism financing, although it's important to note that the FATF does not directly advocate for a total ban on cryptocurrencies. The CMA warned that violators of the prohibition would face penalties in line with the country's anti-money laundering and terrorist financing laws. However, the circular clarified that these restrictions do not apply to securities regulated by the Central Bank of Kuwait, or other securities and financial instruments regulated by the Capital Markets Authority. Alongside banning crypto activities, the Kuwaiti regulator cautioned customers about the risks associated with cryptocurrencies, highlighting that they lack legal status and backing. Kuwait now joins the ranks of countries like Turkey, Indonesia, and Thailand, which have implemented similar prohibitions on cryptocurrency payments. Despite these restrictions, the popularity of cryptocurrencies continues to grow globally, prompting debates about their potential and whether it's possible to entirely halt their adoption. In the comments section, you are invited to share their perspectives on whether cryptocurrencies can be stopped or not. For more daily dose crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.